I'm Olivia Voznenko.
I'm Steve Guilfoyle. This is Street Smarts.
Steven, are we getting in a fight now? I feel like Peter Pan in this outfit.
Sorry, ma'am.
Speaking of that, is this like does Peter Pan hold a pitchfork?
Yeah. Well,
like right in the S&P?
Speaking of pitchforks,
yeah.
The S&P is the exciting chart right now. The president made those comments just a few minutes ago that I saw run across Bloomberg.
Is that not the worst news we can get right now?
Well, he didn't express too much confidence in getting a deal done with China, and the market immediately reacted. But it actually held its ground where it was supposed to, and it's coming back right now.
Hey, you called that, and you have a really cool chart to look at with like 18 things going on.
yeah, it's a busy chart, but it does tell the folks what they need to know. All right, you can see here, you can see the converging triangle or the large pennant formation. Those are the orange lines on the chart you folks are looking at.
The orange triangle, and then
right.
what that does, it's consolidating as it gets to the tip, which you can squeeze either way.
And it's building up anger in a way, technically speaking. So when it gets to that close where it came around, I guess, March 7th to 10th in there, it explodes to the upside. Now, technically, it could explode either way, but this one exploded to the upside. And you see the breakout, which hit 27.43. That was the high. That's a Fibonacci level. That's a Fibonacci level, 61.8%, which is really important to guys who look at these things. It retraces the high to the low from January to February and back 61.8%.
Yeah.
Now, 2678 is your 50-day simple moving average. Why is 2712 important today? Well, because it was the low yesterday, and it's almost halfway between the 2 points. So if it holds yesterday and today, it actually confirms the uptrend.
There's so much confirmation going on right here.
As long as this holds for the rest of the day, yeah.
Listen, I say, news can trump the charts, but in the meantime, it does, literally. Or Trump can trump the charts.
Trump can definitely trump the charts.
And we had some macro leading up to that. We had retail sales. Tell me what you think about retail sales, Stephen.
It's obviously the revisions were very nice. February was changed to unchanged because it had been a negative print. March was jacked all the way up to 0.8% month over month. Mm-hmm. The April numbers are actually just what was expected, except the control group was kind of nice.
Yes, the control group. And actually, I have a chart about the control group if you want to take a look. As you can see, it is up in April. But look, that's
It's
3
trending
times
higher, and that's actually quite...
But look where it was here.
That's quite positive for GDP when you see it higher. And I think that chart here may not be expressing the revisions we've seen. The February was slightly higher than that. So I think you may actually get a slightly better number than the final number for GDP for the first quarter.
And the control group, okay, so that's X autos, gas, materials, building materials, food services.
It's more precisely what the Fed looks at. It's another measure for core retail
And is
sales.
that why we're seeing yields go like...
Well, yeah, that, and I also saw the numbers for industrial production, which were very positive.
Yes.
You kind of got to throw out housing starts a little bit because they're greatly impacted by the interest rate. So I don't think we have to. They're not awful, but they seem to be declining just a little bit from where they were. Mm-hmm. And I think the manufacturing surveys were very important. I don't know if you noticed, but New York and Philly, they're both.
Oh
very
yeah,
hot.
Philly was the hot one, and now New York is catching up.
Right, and what we're talking about there is. New orders is always important, but we're looking at prices there because inflation matters as far as the Federal Reserve is concerned.
Absolutely, and we're going to get some more housing data next week, right, homie?
Oh yeah, new
all
home
right.
Sales.
And okay, let's stick with retail sales because we also got some retail earnings like the Macy's, Walmart. Let's look at Walmart.
Oh yeah, let's look at Walmart. How interesting was Walmart?
Yeah. Okay, let's make sense of this. Let's go down the aisle. Let's go down aisle 9 where we make sense of things for Walmart.
Right.
Were people not satisfied with Walmart's decision to acquire Flipkart? Is that the problem? Because their e-commerce was great. We were looking out for that.
Right,
earnings
33%. Off of last time's 23%.
Yeah.
I think expectations are that Target will also do well next week. So, I think that was actually a positive. And the Flipkart purchase, I think, was... I'm a Walmart shareholder. I'm also short puts down lower, so I have a stake in this.
Okay.
And I am impressed with the way they're going. Obviously, there are going to be bumps in the road when you're trying to raise everyone's pay, which is what they're doing at the firm, when you're making these expensive purchases like the Flipkart. But hey, they have a foothold in India now, which is really important. I mean, Alibaba's got Japan, China rather. I'm sorry, and Amazon's got the United States or North America. Well, they now have a stronghold, a foothold in the largest growing democracy in the world.
Right. And as a shareholder, you are happy with the earnings.
Oh, I'm very happy.
Could it get better? Could it get better? It can always
it could
get better.
definitely get better. But the reason why you're seeing negativity in the stock today is more this Kroger deal with Ocado.
Yes, I made a new acronym, guys. For the big retailers out there, it's AWA.
AWA?
Yes.
Explain.
Amazon, Walmart, Alibaba. But if we add Kroger to the mix, it could be Waka. You like that? Waka.
Really a grocery store. I mean, I know that's retail, but I mean.
Well, okay, let's talk.
Okay, so.
Oh, wait, is this Market Rush?
I guess this could be market.
It is. Let's do it.
Okay, so let's look at Kroger. I mean, do you want to buy Kroger here, trading around 25.5, up 2%, 2.5% on this good news? It's not a real sexy name. I mean, they're a grocery store.
You can't even say it's sexy.
Right, and they're fighting Walmart and they're fighting Amazon to sell you groceries. So they're up against some big kids. Yet it's interesting, and I like this technology firm Ocado, which I think.
Well, what's this deal?
I think the WalMarts and the Amazons are probably trying already to go there, but they're all going to have to copy this automated warehousing type system that will actually improve the way that these firms deliver the last mile, where they get the groceries to you in a more timely fashion, which I think almost everyone probably would like to see.
Yeah, definitely.
So
what'd you do?
How are you going to trade this Kroger?
How are we going to do it?
All right. If you look at a chart of Kroger, early March right through mid-April, $23 was staunch support.
Yeah, and look, it filled that gap right there.
Right.
Okay.
That was firmer than Stonewall Jackson's brigade at First Manassas. So you have a reason to believe that the firm can, on a downtrend, if this ends up being a negative down the road, that they'll find their footing there around $23. So what I want to do as an investor, because you can see they suffered a death cross a couple weeks ago.
Yeah.
So and it didn't really impact the stock one bit.
No, it didn't.
So what you want to do here, from my perspective, is I want to get short the puts. So in 23 looks like there's support there. So we can see $23 puts right now are trading around 50 cents.
Okay. Are you doing a live trade right now?
Yes.
Yes, I love live trades.
There it is. Okay.
Here we go. Okay.
All right, so we're trying to sell July 20 puts, $23 puts.
Yes, sir.
In Kroger at 49 cents, which is the bid side.
Okay.
So we're going to launch this.
Okay. Mm-hmm.
And I think we have a trade.
There we go.
All right. So now we're short at that level. If the stock takes off, it's $49, right? We pay for lunch. If the stock comes in, we already think we want to buy it at $23. Well, if it comes in all the way, we'll buy it at $22.51 because we've already lowered our net basis if it goes that way by the 49 cents that we have already taken in as revenue.
Awesome. So if you do well, do you do the shopping cart for Kroger?
That's right.
No? The deli slicer in the meat department?
And
no?
if you get bored by the position, you can always cover it.
That's true.
Before July 20th.
We'll take cover.
In July.
All right, cool.
All right.
Steven, what else?
So where do we want to go?
Hey,
you know what? We want to talk about the stronger dollar, right? And what it's doing to the commodities.
Oh, man. It is just wreaking havoc. It's this little mischievous creature, and in precious metals.
Right. The dollar has oil's actually come in a little bit today. Mm-hmm. But we have gold that's coming in. Gold's trading at $1,290 right now.
Yeah. Okay, gold. We're going there first.
And,
okay. Oh, man.
Right.
Now, there's some major buy signals right now. Where are we?
Well, we're below. I actually thought that 1302, 1305 would be where you would want to buy gold right now. And I don't know if you saw Jim Rickard's latest. All right. His piece.
Love Jim.
I took notes here. His piece entitled "Money is Gold and Nothing Else," which is actually a quote that J.P. Morgan spoke when he testified before Congress in 1912. All right, now Jim's thesis here is that his forecast is that we could be looking at $10,000 gold eventually. And he has some reasoning behind that. It might seem a little crazy to you right now when gold's trading at $1,290, but there's some reasoning here.
Okay.
And his reasoning is, I got to read these to you.
The glasses are going on.
Well, I need the glasses because I can't see.
No problem.
I'm an old man. All right, dollar values will eventually collapse based on a loss of confidence. All right, still quite sizable balance sheet on the Federal Reserve, where they printed a lot of money, in other words.
Sure.
U.S. government deficits to be greater than $1 trillion per year. Debt to deficit ratio of 105% expected to climb to 110%. The evolution of commodity pricing, Jim fears, might actually end up moving away from the dollar with the encouragement of the Russians, the Chinese, and the Iranians, and then maybe the Turks as well, and move towards the IMF's special drawing rights, the SDR.
Wow. So we're one step closer to that.
Well, that's Jim's thoughts right now, and I see the SDR as maybe being the evolution of Bitcoin, but that's just me. That's not on Jim's article, but I could see when
IMF coin.
Right, when Bitcoin decreases in value, which may annoy some of our viewers. When it becomes less significant, it may just be taken over for a purpose such as that, so the IMF can eventually go to a cashless society so they can tax us all against our will. But that's just me thinking.
You sound like the group of anti-disestablishment government people I hung out with college. All right.
Well, anyway, to make it short here, Jim's feeling is that in a crisis, gold will display conditional correlative qualities. Mm-hmm. All right, the potential for asymmetric performance is there, far greater to the upside than to the downside. In other words, if stocks crash in a great recession or in some kind of great loss of confidence, that it'll be gold that goes the other way, and you'll have yourself merely a portfolio saver if you have 10% of your investable assets in gold.
So at that point, like 1,300 is a great deal, but a lot of people have buy targets in the 1275 level. Would you agree with that?
Well, yes, but if that's really where you want to buy it, this is where you want to start.
Okay. Well, since we ended with gold last time, let's just talk real quick about oil. Broke out of a nice bull flag. What else?
Oh, well, it's a lot of that has to do with the Iranian situation, but really only 200,000 barrels per day are expected to come off if the president does reimpose sanctions on Iran. This is really, I know we heard a report to the contrary yesterday, but this is really a demand story going forward. Okay. India, China, these places are not going to demand less oil going forward. The Permian is bottlenecked right now. So, and even though we are 2/3 self-sufficient on oil at this point, the impetus, I believe, is still for higher oil prices. So even here at $71, $72 per barrel, I see WTI crude, not just Brent, but I see WTI crude eventually getting to the high 70s and maybe even $80 sometime soon. Some people are putting $100 price targets on this.
That could be some crude news.
I think you want to be long some big oil. I'm long Exxon myself, but choose your favorite big oil stock with a nice dividend.
All right.
Get involved.
In the meantime, I guess we're going to say so long, right?
So long, kids.
Thanks for tuning in, guys. See you next week.